Good morning. The markets are moving and so are you. From the BizNews studio, this is BizNews Daybreak for Wednesday, the 4th of February, 2026. I'm Alec Hogg. Here's the context you need to win the day. Well, on the markets, a story we're becoming accustomed to. The gold price edging back slightly, this time above $5,000 last night. And the rand gaining, this time to just under 16 against the US dollar. A mostly red day on Wall Street, though, with NASDAQ taking a 1.5% hit and the S&P 500 down almost 1%. In our US dollar portfolio, strong quarterlies saw Palantir gaining 7% against a shock for software companies generally. And defense stock Teledyne also bucked the trend. It gained 4.5% last night, aided by growing tension, no doubt, in the Persian Gulf. Here is the freshest news produced by our partners at Bloomberg.
The U.S. Navy shot down an Iranian drone headed toward a U.S. aircraft carrier in the Arabian Sea. U.S. Central Command said the unmanned aircraft aggressively approached the USS Abraham Lincoln with unclear intent. Even so, White House Press Secretary Caroline Leavitt says talks with Iran are still scheduled for later this week.
These talks, as of right now, are still scheduled. President Trump is always wanting to pursue diplomacy first, but obviously it takes two to tango. You need a willing partner to achieve diplomacy, and that's something that Special Envoy Witkoff is intent on exploring and discussing. As always, though, of course, the president has a range of options on the table with respect to Iran as commander-in-chief.
Now, today's incident did spook the oil market. WTI crude oil finished up 1.7% to 63.21. Shares in software companies tumbled today on fears over how AI will impact their core businesses. The new release of an AI tool from Anthropic added to those worries. The first wave of today's selling was in stocks associated with legal software and publishing. And then media and financial data shares were also hit. The iShares Expanded Tech Software Sector, ETF, was down today by 4.6%. After the bell, Advanced Micro Devices reported fourth quarter earnings above Wall Street estimates. However, the company gave a disappointing forecast for the current period. AMD is the main challenger to Nvidia in the market for those AI processors. Here's Ray Wang, CEO of Constellation Research.
Well, right now there is an incredible alternative to Nvidia at the moment, but when they get out their Helios chips and when they build the racks that are going to come in place, that's going to be the first time Nvidia is going to have a credible challenge to the GPU dominance that they've had for quite some time. That's what the market's waiting for, but they haven't taken orders yet. They haven't announced as much as they need to, and right now these are just pure performance earnings, pre-GPU, pre-AI that they've been able to do. And it's a pretty good number there, but once again, the street isn't interested. So this is kind of where we are at the moment.
That is Ray Wang from Constellation Research. Shares in AMD were down by more than 6% in late U.S. trading. Tomorrow, after the closing bell, we'll hear from Alphabet. Bloomberg's Tom Busby has a preview.
Google's parent company Alphabet expected to post solid revenue and profit growth for last quarter, with its cloud computing division expected to get a big boost from the release of its latest Gemini AI models, which it also integrated into its Google Search and its Chrome browser. Like rivals Meta and Microsoft, a big focus for investors, though, is all the spending it's done on AI infrastructure and efforts to power its data centers. Bloomberg consensus calls for revenue of $111.4 billion on earnings per share of $2.65. Tom Busby, Bloomberg Radio.
Locally, a fabulous session for BizNews portfolio stalwart Sabvest, which gained 6% yesterday. And Orion, we're getting used to seeing Orion getting higher and higher. Got to 47 cents yesterday on the news, up 7% on the news of its new partnership with BHP. Back across the water in the United States last night, the feature, as you heard in the news headlines, was software stocks. Here's some more from our partners at Bloomberg.
Anthropic really freaked out the market. Software has been selling off. Software stocks, in particular within tech, have really done poorly. I mean, if you look at like the Magnificent Seven, you can see Microsoft has really come down more than the others. And that's spending on AI, and that's also software. So you got a lot of movement around what is at risk, who is going to survive AI, who isn't going to survive AI. And as these tools come out and they take the place of other data providers, you saw like the London Stock Exchange down, you saw S&P Global down.
It's wild.
Really weird, really weird reactions. And it's because people are afraid that they're going to be replaced. That's different than the big mega cap earnings where you got Google coming in. Alphabet, they're up like 10%. They were the best performer last year. The question is that they're within spitting distance of Nvidia, of passing them as the biggest stock in the world.
Market cap, yeah.
Yeah. So I mean, will they justify that rally? Today may have been overdone. I mean, that is a lot of what we've heard from analysts, what we've heard from traders. It's just it could have been kind of a DeepSeek moment where people initially react and then sort of come back to the table and think, well, maybe that was overdone.
And we should say, our Mandeep Singh of Bloomberg Intelligence said, software's not all going away.
No.
And he said some of it could have been a valuation story as well.
Exactly. So, I mean, and you saw like Palantir did really well. They haven't done great this year, but they got a bounce today because of their earnings. So, it's sort of a moving target when you're talking about AI with winners and losers, and we're just still in the very early innings.
But when it comes to the share market, one man's disaster is another man's opportunity, especially, it seems, for those wanting to now buy into Mag 7 member Microsoft. We dumped this one in our portfolio some time ago, and, well, now I'm pretty thankful we did so. Here's Bloomberg Equities reporter Ryan Vestelico giving us another aspect or another angle on what went on yesterday and why some are terribly excited about the opportunity Microsoft is presenting at these levels.
So Anthropic's latest tool is really just sort of the latest in a series of AI tools that have come out and really it spooked investors about what all of this is going to mean for legacy software companies. Are they going to see their growth eroded? Are they going to see pricing pressure on margins? The outlook has become extremely clouded and by most accounts extremely negative. People are viewing this as one person called like a SaaS apocalypse. So software as a service companies that historically had pretty durable growth and pretty consistent trends. Now their outlook is a lot more muddled and people are just dumping pretty much everything across the board. We are seeing major names down pretty significantly at multi-year lows.
SaaS Apocalypse. I find this interesting because in August when I was in London, there was a very severe sell-off in European software names on the very simple anxiety that AI tools like Anthropic can do exactly the same thing that software you pay for can do. August was a long time ago and some of those names recovered. In your piece, there are people that see this as an opportunity, right? This sell-off.
Yeah, a lot of valuations have gotten down to levels that historically have been quite attractive. And there is certainly a lot of optimism, especially for leaders in the industry, most notably Microsoft. Now, Microsoft, as you know, last week struggled quite a bit following its result. Its Azure growth and its cloud computing business, that was a little bit disappointing. That stock fell 10%. It hasn't had an up day since. However, that stock is getting to levels that are, it's below its longer term valuation multiple. It's getting pretty cheap. It wouldn't be surprising if you see some people look in and try to buy the dip on stuff like that. I've had people talk about Snowflake as a company that looks like it can navigate this era pretty well. But just in general, there is so much confusion about what growth is going to look like, what margins are going to look like, that people aren't really taking the risk, especially since the hardware part of the AI trade, chips, memory, storage components, all those parts of the market continue to look pretty strong and are delivering the kind of growth that people really want to see in this backdrop.
Cody from Paul has sold multiple vehicles to WeBuyCars. Suspicious? I think so.
Is that a crime?
No. Where are you getting the cars?
I buy them and I sell them at the spot like a normal person.
Okay.
No, man, I'm just an accounting student. I know a good deal when I see one.
That's Excel meant. What's more stressful, tax season or selling a car at WeBuyCars?
Tax season, obviously.
WeBuyCars, the easiest way to sell your car by far.
Back on the local news front, private airline CemAir recently celebrated its 20th anniversary, but the big story is its new strategic alliance with the state-owned national carrier SAA, showing that SAA is definitely back to stay. It's a move that sees the private sector cooperating with, rather than competing against, the government incumbent. CemAir CEO Miles van der Molen took my questions on this yesterday, but he explained how this new code share agreement works, what it means for your next flight booking with CemAir, and why putting small planes on SAA routes creates a 1 + 1 = 3 scenario for the local aviation industry.
Fairly standard airline commercial partnership that we have with SAA. The first rung on the ladder was a couple of years ago. We entered an interline relationship with them, and we've moved to a code share. We believe strategically it's a great move. SAA has done a lot to right the ship, and it's very commendable what they've achieved. And they have taken a pragmatic approach, which is growing through partnerships. It's a non-equity partnership, so it really is just working together. The first level of the code share is simply putting each other's codes on flights, and then at some point we'll look at schedule alignment and growth thereafter. But we believe SAA's future is rosy, and it's seen a lot of stability with Professor Lamola now being in the seat for multiple years. A lot of the misgivings people had about them before, that they are starting to fix, so that should be noted.
But I suppose it makes a lot of economic sense, and at some point in time, you would be taking certain of your aircraft that wouldn't have been full on that Joburg Cape Town route off, so that your customers can fly via SAA in future. Am I understanding this properly?
It's absolutely our intention that we will either on a weekly seasonal basis or a longer-term seasonal basis, make sure that we ride match the required capacity with the aircraft type being operated with our partner. So on peak days, it makes sense for them to operate the flight. On quiet days, it might make sense to us for us to operate a flight, but we can optimize by looking at historical data and projecting forward and working out what would be the best solution for a future date.
So there could be, in the opposite case then, some SAA customers who book with SAA who actually fly from Johannesburg to Cape Town with you.
Correct. That's exactly how that'll work.
But what is the intention, though? Is it that you get to service semigration routes? I guess there's probably a better word for it, but that kind of fits with our community. Are you going to be focusing more planes there?
So the intention is two things: commercial optimization and increased reach. So everybody can end up with a fuller flight because our aircraft types are so different and such different seating capacities. There's an enormous scope for optimization there. In terms of increased reach, we can utilize their destinations. For now, it's only domestic. In the future, we are hoping to code share on the regional and international routes, but we can benefit from their reach and then from ours. So you end up, in the eyes of a customer, with effectively a larger airline mass, because mostly when people book a ticket, they aren't that passionate about who they're flying with. What they really want to know is that this is going to solve their travel problem.
Our neighbor Zimbabwe is a country on the brink, and man, it should be sending us lots of messages if only Pretoria would listen. Unemployment there is sitting at 90%, and now it's into its sixth currency in just 20 years. But the gap between the political elite and the ordinary citizen has never been wider. Zimbabwean journalist Tendai Ruben Bofana spoke to my colleague Linda van Tilburg, and he told her how government ministers are driving supercars while the nurses and teachers who serve them can barely afford a loaf of bread. Tendai reckons it's only a matter of time before something dreadful happens there. You can hear that full interview on BizNews Radio. But Linda asked him to describe the state of the nation right now.
In a word, I would say worrying. We've been in this state for the past 2.5 decades. As you would know, we've gone through periods of hyperinflation, which have never left us. We are now on our 6th currency, local currency. In the past 20 years, we've changed our currencies 6 times. Unemployment is over 90%. So you find that most of our youth, they are now relying mostly on informal trading, sitting by the roadside, selling airtime vouchers, bananas, vegetables. 80% of our population is living below the poverty datum line. They're living in poverty. And nearly 50% are in extreme poverty. They cannot afford to put food on their table. They cannot even afford to send their children to school. So if you find that you're in a country where nearly half the population cannot put food on the table, half the population cannot send their children to school, that is not a pretty picture to paint. This is a country that is headed for disaster. It's my country. I love my country. I want to see my country succeed. But on this trajectory that we are on right now, the picture doesn't look good at all. On the political front, we are seeing a lot of corruption that is taking place. I think even you guys abroad, you hear some of the outrageous stories of a few individuals who are getting these multi-million-dollar public tenders without going to tender. Most of the work is not even fulfilled. It's not even completed. When it's completed, it's half done. And these are people who are so unashamed in flaunting their wealth. They're buying the latest Lamborghinis, the latest Bugattis, Ferraris. They're living in huge, massive mansions, giving away cars like confetti, just buying cars for everyone in cash. And this is in a country, as I said, with 80% of the people living below the poverty datum line. So if you're in leadership, how do you reconcile the two? When you are a leader, do you honestly sit down and look at yourself in the mirror and say, I'm doing a great job? No, you can't. You can't. Zimbabwe is richly endowed, just like with South Africa and so many other African countries. We've got lithium, we've got copper, we've got gold, we've got platinum, we've got diamonds, you name it, we have it here. And yet we are living as if we're in some godforsaken wasteland somewhere which doesn't even have a single resource to talk about.
Well, financial advisors and our many expat listeners will come a little closer to this next story, because South Africans who are trying to work or settle abroad are increasingly caught in a bureaucratic maze. And this has been created by SARS, the Reserve Bank, and National Treasury, kind of overlapping each other. Immigration tax specialist William Louw of Sable International says that these overlapping mandates and clashing definitions of residency leave ordinary people confused and exposed. The fallout, he warns, is that expats try and simplify everything, so they cut all their financial times, extract every cent they can from South Africa, and abandon any intention of returning to the country with their skills or capital. A deep, deep shame, given how much this country needs the contribution of everybody who is well disposed towards it. William spoke to my colleague Linda van Tilburg.
Treasury has decided how they want certain systematic structures played out, and SARS and the Reserve Bank are getting confused as to how they should link everything, and they're trying to overlap into each other's realms and causing confusion by using terms which, quite frankly, I don't think they should be considering, and they should be almost staying in their lane to say, let's look at how we deal with our structure. We can maybe use the other department to assist in doing certain things, but let's just make it easier for the taxpayer to deal with their affairs, either from exchange control or tax purposes. One of the complications with SARS is that they don't fully understand the difference between tax immigration via ordinary residence, physical presence, or the double taxation agreement. They seem to think that all of them are once-off effects, which is not the case. People approach us where they've got businesses in South Africa, they're passport holders or ID holders who are living outside the country, and their bank accounts are being frozen and they cannot pay their staff. A lot of South Africans, I believe, go abroad, they're working, their plan is to come back to South Africa, maybe 5 years, maybe 20 years. But while they're working abroad, because they know they want to come back to South Africa, they're building up their asset base and life in South Africa for the return. With these changes with the Reserve Bank, that is being blocked, which means that the economy is losing out because you're not getting investment from South African ID holders back into South Africa. At the moment, you're getting more investments from people who have foreign passports to invest in South Africa, and now they're starting to have difficulty, which means are they going to leave the investment in South Africa?
So do you think the Reserve Bank's treatment of non-tax residents is actually unconstitutional?
I believe it might be. I'm not a lawyer, so I'm not going to say yes or no definitively. But if you look at what is happening, you have a South African ID holder who's living outside the country versus a South African ID holder who's living inside the country. And then you've got a passport holder who's a non-resident living inside the country. So the person who's got the most rights, South African ID holder living in the country. The person with the second rights is a foreign passport holder living in South Africa. Then after that, you might even find that a foreign passport holder who's not living in South Africa has more rights than an ID holder living outside of South Africa. And how can that not be unconstitutional in my little bit limited knowledge?
Bureaucracy, man, it just can get too big and too bad and just too much like walking through treacle. Hopefully someone in Pretoria is listening to this. I know the guys at the Treasury are professional and focused and they don't want to do harm, but they are doing a lot at the moment. Well, now you have the edge. For the full interviews and details behind these stories, head over to biznews.com. I'm Alec Hogg. Thanks for starting your morning with us. Now go and seize the day.